Gold is making big moves, and anyone who's not paying attention is going to get left behind. Now, what I'm about to show you didn't make the front page, although it should have, and I'm going to explain why. Cambodia has become one of the first nations to agree to store their national gold reserves, not in New York, not in London, but in China. And while on the surface that might not seem like big news, it is a massive step forward for China's plan of putting gold back at the center of the monetary system, completely bypassing the dollar, which has huge implications for every single person out there who owns dollars or dollar-denominated assets or gold. Because if you think that your dollars are going to be worth more than they are today, you have another thing coming. And if you think that gold has hit the top, just you wait, because prices are only going to go up significantly based on what I'm seeing. Now, I'm going to explain exactly what is going on with China and the significance and how it impacts us here, as well as the Fed's next moves, the labor market, and what we can expect for both the dollar and gold. Now, in case you missed it, Cambodia's move to become the first country to store their gold reserves in China is big because Beijing is keen on becoming a global gold hub. Why? Because they want to establish a financial system less dependent on the dollar and Western centers. Less dependent on the dollar, more dependent on and based on gold, real, physical, tangible gold. Now, let's unpack this a little bit. Right now, when we think about gold, it is priced primarily in US dollars. It is also heavily influenced and controlled, some might say, by Western institutions. We have the COMEX out of New York. We have the LBMA out of London. And many have speculated that for years they have been suppressing both gold and silver prices. How? Because most of the contracts they have don't result in actual delivery of physical metals, right? 1 or 2% of total contracts. Now, that number has been increasing over the last year or two as more and more people and institutions in particular are realizing you have to have the real deal, but they can still rehypothecate or create layers and layers of paper claims, upwards of a dozen or 100 on a single ounce of gold or silver, meaning that it looks like there is far more supply than there actually is of the real deal. But China is coming to compete against this with the Shanghai Gold Exchange, right? This is their version of the COMEX or the LBMA, but instead of dealing primarily in paper contracts, they are dealing primarily in the real deal, physical gold. This serves as a counterweight to the West and is already making it much harder for the West to get away with their suppression tactics that they've been so reliant on. Now, this is a huge change, not only for everyone holding gold, where we all know that the price should be much higher, that it is severely undervalued, but also for the dollar. Let me explain. The United States is running a massive deficit, right? We all know we have a debt crisis, but that crisis is funded through the issuance of U.S. treasuries, and you have to have buyers for those treasuries. Now, right now, the world is heavily dependent on the dollar. It's the global reserve currency. U.S. treasuries are the primary collateral, but that could be changing as China is creating a network of gold vaults all over the world where you can now settle in physical gold instantly in a way that you never could before. We're, again, not talking about paper promises. We're not talking about a digital ledger. We are talking about real physical gold. That is China's offer to the world. Work with us, trade with us in yuan, but then immediately you can settle in physical gold should you choose. This is huge. Cambodia deciding to store their gold reserves in China is just a first step in this trust that is being built around physical gold as the anchor. And while this is great news for anyone who's already holding gold or about to get gold, again, if you don't already have your gold, get in place now, because again, these moves by China are not slowing down. They're accelerating. They're expanding this network. They're building more gold vaults. More partners are signing on to work with China with gold as the foundation. It is bad news, terrible news for anyone holding dollar-denominated assets. The United States is absolutely sweating over this because what it means is that now likely the debt is going to cost more to service. They're going to have to issue more debt with less buyers, less interest, less demand, meaning that they are going to be forced to print more, that the value of each of your dollars is going to be worth less. Now, if you want to learn more about all of this, I am doing a live free webinar next Tuesday, November 18th, 10 a.m. Pacific, 1 p.m. Eastern. Please register if you haven't already. It is called the Great Gold Reset. That's what I'm calling it, the Great Gold Reset, because that is exactly what is happening. The collapse of the dollar and the creation of a new system with gold at the center. And I'm going to go over all of the moves globally in far more detail than this video, what is going on, what comes next, and how to prepare. So register right now by scanning the QR code, or there's a link down below. Make sure you do it because, again, it's free and it's live. So I will be doing a Q&A, which I love. That was my favorite part of last time, was interacting with everyone over the chat. But back to the United States and gold. Now, gold, of course, has been up on a rise again. Gold hits 2-week high as weak U.S. data boost rate cut expectations. Why is gold rising? Aside from everything that's happening globally, well, here in the United States, people are panicking, right? There's this assumption that the U.S. is going to cut rates. Why? Because everything is tanking. We have been told for a long time, oh, the economy's fine, the labor market's fine. This article made me laugh. I mean, it's not funny. It made me laugh because it's so stupid. It said, yikes, top investment bank looks under the hood of the economy and finds the labor market doesn't look that good. Go figure. Really? Who knew? Not me, not anyone else who's paying attention. But this was interesting because while I don't trust the official data as far as I can throw it, we all know it's worse. It continues to get revised downward when we talk about hiring and labor statistics in particular. It is true that it at least is some kind of barometer, or at least it's what people have been going off of. We don't even know what's been going on the last couple months during the shutdown, the last 40 days, right? So people right now are getting laid off and not hired again. Again, go figure, we knew that. But UBS came out and said firing is running higher than advertised, citing the fact that unemployment insurance claims, layoff announcements, and WARN notices have all been running well ahead of the pre-pandemic pace. This article even goes on to say that in addition to this year having the highest year-to-date layoffs since the great financial crisis, things are not going to get better going into the holidays. In fact, right now, as of September, October, we're predicting around 400,000 holiday rolls, sharply lower than the 625,000 average for the 14 to 19 period. That's significant. That's 250,000 jobs that are not going to be available this holiday season that there were last season. And I don't know if anyone else is seeing this. I have many friends who have told me that they're not getting the holiday gigs that they used to. In fact, just yesterday, I was at the local grocery store and I was talking to one of my favorite checkout men, and he told me, you know, it's crazy. Normally this year I'm working 6 days a week and I'm so busy leading up to Thanksgiving. And he said, right now I'm at 15 hours. They're not even giving me anymore. And I was shocked, and I said, well, is it because of less spending? And he said, no, they're just not hiring. They're trying to cut costs. Lines were there, right? But they don't care, because at the end of the day, all of these companies are battening down the hatches from A to Z. No matter what industry it is, everyone is looking to where they can cut corners. Why? Because corporate America knows what's coming next, the consumer slowdown. In fact, I saw this article today, too, that says U.S. household debt hits a new record, NY Fed finds. But not only is debt at a record high, Americans are falling behind on credit cards, loans, and mortgages. Is it time to worry? This headline says. Yeah, I think we're beyond is it time to worry. Americans now owe nearly $18.6 trillion in household debt. That is the highest number. And the overall delinquency rate rose up to 4.49%. Now, that varies depending on what category we're looking at. Auto loans saw 3% of balances move up into 90-day delinquency, the highest in 15 years. Credit card debt also worsened, with 7.1% of balances becoming seriously delinquent. And student loans surged to 14.3%. I mean, at the end of the day, if you are asking Americans to either feed their families, pay their electric bill, or pay off their student loans, right, we know what people are going to choose. But this signifies an economy that is not sustainable. People cannot afford to live as it is right now. And unfortunately, things are going to get worse before they get better. Now, how does this impact the dollar and gold? Well, it says that as financial stress is spreading, the Fed is going to be put in a tight position, right? They're kind of trying to decide, well, what do we do? There's this dual mandate. Do we support the labor market, or do we support making sure that inflation slows down that rate? Now, so far, they haven't really done a good job of either, I would argue, right? The labor market is obviously far worse than what they're telling us. And inflation has not gone away. In fact, it absolutely has not hit the target. This makes me so mad because people say, oh, well, inflation's under control. No, it's not. Still going up. Still taking away your purchasing power every single day. We're never going to get back what we lost, and we're continuing to lose more each and every day. But we all know that the second the Fed steps in and tries to support this labor market, which is, I think, where we're going with this, right? They're going to keep cutting rates. They've already said they have to end quantitative tightening. What does that really mean? It means the printing press is coming back on. They are firing it up. Why is gold rising? Right? Because gold knows what's coming next. It knows that the dollar cannot continue on this path. The Fed knows it too. Everyone in power knows it. That's why institutions are preparing and positioning with physical gold, not with dollar assets, right? That's fine if you want to go out and make a profit today, but be prepared and be ready for what's coming next. Make sure you have your insurance policy in place now, because it's going to be a lot harder to buy gold in the future when gold has gone up significantly in price and your dollars buy less. Each dollar buys less while gold goes up, right? That is a position you don't want to be in. If it were up to me, I would make sure that right now everyone has their insurance policy, which is physical gold and silver. Make sure you have that in place now so that you can sleep well at night, right? Because again, all the signs are there. We know what's coming next on a global macro scale when we look at the monetary system, as well as when we look here at home in the US, right? It's all interconnected, and it all is telling us what's coming next, that your dollars will never be worth more, and that gold's price rise is just getting started. So if it's up to you and you don't already have gold and silver yet, make sure you have it in place. If you have any questions about how to do that, we at ITM Trading, we are a full service physical gold and silver dealer. Call us at the number below. We not only sell gold and silver, but we work with people just like you to make sure you have a strategy in place, right? A plan for what is coming next, tailored to you, your needs, your concerns, what your goals are. So just make sure that you have it. Even if you don't purchase from us, call us and get some advice. It's completely free at the number below. And again, as I mentioned earlier, if you are not already registered for the live Great Gold Reset webinar, scan the QR code, reserve your seat today, or click the link in the description below. It is going to be a ton of information. And again, it will be totally live. It is free to register. I really, really hope to see you there. And as always, thank you so much for being here. I'm Taylor Kenney with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.